Welcome, everyone, to another deep dive into the world of investing.
Ah,
Today, we're looking at this book,
no problem.
Multibagger Stocks, How to Multiply Wealth in the Share Market by Prasenjit Paul.
Okay.
And Prasenjit Paul, he claims to have made over 100 times
Ah,
his portfolio grow over the last decade.
impressive.
In this book, we'll learn about some of his personal picks,
Oh, cool.
like Chemcrux Enterprises, which returned 40 times his investment,
Wow.
and Lancer Containers,
Uh-huh.
which returned 9 times.
Okay.
Our mission for this deep dive is to figure out what multi-bagger stocks are all about,
All right.
how we can identify them,
Mm-hmm.
and what factors contribute to their growth.
Sounds good. I'm ready.
Let's start it with Prasenjit Paul's story.
All right.
He started as an engineering student, and he had limited capital and no mentorship.
Oh, wow.
So he was really kind of going at it alone.
Yeah.
And the online trading landscape back then was completely different from today.
Mm-hmm.
So he's faced a lot of hurdles in the
That
beginning.
makes sense.
And it's interesting, he actually had 5 failed attempts to create a passive income stream
Really?
before he ultimately succeeded with his book and YouTube channel.
So persistence paid off for him.
Exactly.
Right.
Let's talk about multi-bagger stocks now.
Okay.
The term was popularized by Peter Lynch.
Yeah.
Have you heard of him?
Of course. Who hasn't?
So he had this analogy of a stock returning tenfold, being called a 10-bagger.
Right.
It's like a baseball term.
Yeah.
And
That's clever.
in India, we have some great examples of successful multi-bagger stocks like HDFC Bank and Infosys.
Right.
These companies turned ordinary investments into incredible wealth.
Yeah. It's amazing the power of long-term growth.
But,
Yeah.
finding these opportunities,
Yeah.
it's not easy.
It's definitely not a walk in the park.
For every HDFC Bank and Infosys,
Mhm.
there are probably hundreds of stocks that just didn't perform that well.
Right.
A good example is Hindustan Motors.
Oh, yeah.
It used to be a very popular player in the Indian automobile industry,
I remember that.
but it didn't end up being a multi-bagger.
No, it didn't.
So how do we differentiate between these potential winners and the companies that might just underperform?
That's the million-dollar question, isn't it?
Well, Prasenjit Paul,
Yeah.
he proposes this idea
Okay.
of a multi-bagger life cycle,
Mm-hmm.
which has 4 phases:
Okay.
initial advancement,
Mm-hmm.
mature,
Got it.
a declining.
That makes sense.
And he emphasizes
Yeah.
the importance of investing during the advancement phase.
Okay.
That's when a company started to get market recognition, but they're still under the radar of most investors.
So they have room to grow.
Exactly.
Interesting.
Like Chemcrux Enterprises and Page Industries,
Okay.
those companies generated huge returns
Uh-huh.
during that phase.
Interesting.
So to truly understand these multi-bagger returns,
Right.
we need to understand the factors that drive them.
Absolutely. The underlying forces.
Prasenjit Paul outlines a few key elements.
Okay, let's hear it.
First,
Yeah.
margin
And
expansion.
then expansion.
He specifically focuses on EBITDA and net profit margins.
All right. So profitability metrics.
Right. These margins tell us how profitable a company is.
Got it.
And what's really encouraging
Yeah.
is a consistent upward trend in these margins over time.
Okay. So sustained growth.
Like
Yeah.
Abbott India,
Yeah.
they have a really strong margin trend.
That's a good sign.
Another key element is debt.
Debt.
Prasenjit Paul uses the debt-to-equity ratio
Okay.
to categorize companies
Mm-hmm.
and assess the risks and opportunities tied to different levels of debt.
Makes sense. Leverage can be a powerful tool, but also risky.
Capacity expansion is really important too.
Capacity expansions.
Companies can do this in a few different ways.
Like what?
Building new facilities,
Mm-hmm.
modernizing their existing ones,
Mm-hmm.
or changing up their product mix.
Right. Strategic adjustments.
Take Lancer Container Lines, for example.
Okay.
They expanded their capacity without making massive capital investments.
Wow. So smart cost management.
And that led to a significant expansion of their margins.
Impressive.
Expanding geographically is another way companies can unlock multi-bagger returns.
Geographic expansion.
By tapping into new markets.
Yeah. Going
Like Caplet Point Lab.
Mm-hmm.
They expanded geographically, and it resulted in a consistent upward trend in their net profit margins
So their strategy paid off.
and their stock price.
Of course.
Now, remember Chemcrux Enterprises?
The one with the 40x return.
They benefited a lot from the low base effect.
Low base effect.
Companies with smaller revenue bases,
Right.
they have this advantage where they can grow much faster
Makes sense. Less to build on.
than larger companies in their industry.
Yeah. The growth percentage can be much higher.
Okay, so we've talked about identifying multi-baggers,
Mm-hmm.
but it's also really important to recognize the warning signs,
Absolutely. The red flags.
the things that could indicate potential wealth destroyers.
Yeah, we need to be careful.
One of the most important red flags is profit margin contraction.
Profit margin contraction.
Even if a company is experiencing sales growth,
Uh-huh.
declining profit margins can be really bad news.
Okay, so revenue isn't everything.
Prasenjit Paul actually cites an example where a company's stock price dropped by 60%
Wow.
despite healthy revenue growth
That's a big drop.
because their profit margin was shrinking.
So profitability matters more.
Exactly.
Interesting example.
High debt can also be a real problem.
Right, it restricts a company's flexibility.
It makes it harder to navigate through tough economic times.
Exactly.
Another red flag we should look out for is promoter selling.
Promoter selling.
When those at the top of a company
Yeah,
start reducing their ownership stake,
right.
it raises questions about their confidence in the company's future.
Makes sense. If they don't believe in it, why should we?
Like Valiant Organics.
Oh, yeah, what happened there?
As the promoters decreased their stake,
Mm-hmm.
the company's performance went downhill.
And I bet the stock price followed.
Absolutely. Social media is full of these so-called multi-bagger stock tips these days.
It's everywhere, right?
It's tempting to follow them.
Yeah, I can see how it's tempting.
But Prasenjit Paul really cautions against blindly believing these tips.
Well, of course, due diligence is crucial.
He really stresses the importance of doing your own research
Right.
and really understanding the business before you invest.
So many of those tips online are just hype with no real substance.
Exactly.
I've seen that too.
Prasenjit Paul shares some interesting case studies in the book,
Oh, that's cool. Real-world examples?
like his investment in Prasenjit.
Okay, what's the story there?
He explains all the factors he considered,
Mm-hmm.
the steps he took, and his reasoning behind the decision.
So it's a practical lesson in rational investing.
One thing that really stood out to me was his emphasis on patience.
Patience.
He says the multi-bagger journey is a marathon, not a sprint.
I like that analogy.
Big returns don't happen overnight,
Definitely not a get-rich-quick scheme.
and you need to be able to withstand those market ups and downs.
Right. Emotional discipline is key.
He acknowledges that luck plays a role,
Of course, there's always some element of luck.
but he says luck favors those who are prepared.
Makes sense. You got to be in the game to win.
If you do your research,
Right.
analyze companies thoroughly,
Mm-hmm.
and hold on to those with strong potential,
Yeah.
you increase your chances of getting lucky.
So preparation meets opportunity.
I think Prasenjit Paul's story is a great reminder
Yeah.
that success in the stock market rarely follows a straight line.
Definitely not a smooth ride.
It's all about learning from your mistakes,
Mm-hmm.
being persistent, and adapting as the market changes.
A constant learning curve.
Maybe we can summarize all this into like 10 key takeaways.
Oh, I like that a 10-point checklist for finding multi-baggers.
All right, number 1,
Hit me with it.
understand the multi-bagger life cycle
Okay.
and try to invest in companies that are in their advancement phase.
Got it. Number 2.
Focus on companies with strong financials
So consistent profit margin growth.
and a healthy debt-to-equity ratio.
Number 3.
Look for companies that are expanding strategically.
Either their capacity, their geographic reach, or benefiting from a low revenue base.
Number 4,
All right, what's next?
be cautious of companies with shrinking profit margins.
Even if their sales are going up.
Right.
Number 5.
Avoid companies with too much debt.
Smart debt can be good, but too much is a red flag.
Number 6,
Okay.
pay attention to whether promoters are selling their shares.
Right. That can be a sign of trouble.
Number 7,
Hit me.
don't blindly trust stock tips you see on social media.
Always do your own research.
Number 8,
Okay, almost there.
be patient.
The market rewards patience.
Multi-bagger returns take time.
Number 9.
Luck plays a role.
But the more prepared you are, the luckier you get. And finally, number 10.
Never stop learning.
Right. The market is constantly changing.
And the best investors are always adapting.
I think those 10 points capture the essence of Prasenjit Paul's message.
It's a great framework for anyone looking to find their own multi-bagger success stories.
So now that you know the key factors,
Yeah.
what industries or sectors would you investigate for potential multi-baggers?
That's a great question.
And what specific news or trends would indicate that a company is entering that exciting advancement phase?
That's something for our listeners to think about.
It's a journey of discovery, and it starts now.
I think this deep dive has been really insightful.
Oh, me too.
I feel like I'm ready to start looking for those hidden gems in the stock market.
It's like a treasure hunt, right?
Prasenjit Paul's journey is so inspiring.
Yeah, it shows what's possible with the right knowledge and approach.
And his insights give us a solid framework to work with.
Absolutely a roadmap for success.
Identify those potential multi-baggers
Mm-hmm.
and avoid those pitfalls.
Those are crucial.
Investing is such a fascinating journey.
It really is.
You need knowledge.
Patience, for sure.
And you got to be adaptable.
Absolutely. The market's always changing.
But if you stick to those principles
Right.
and stay curious
Mm-hmm.
and always keep learning,
The rewards can be amazing.
a huge thank you to everyone for joining us on this exploration into the world of multi-bagger stocks.
It's been a pleasure diving deep with you.
Remember, you can find all the resources we mentioned in the show notes.
Happy investing, everyone.
Until next time.